Hi everyone and welcome to the weekly update with me, which Perry market analyst at Handset Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now moving into this week, we've had this dollar rally which has been driven by a bit of an improvement in dollar data, but also the fact that Fed members have been increasingly sort of talking up the prospects of further rate hikes this year. I mean, the general gist is sort of still two, which would make three for 2017, but there is still the possibility if the data continues to improve, therefore they could sort of fit in a fourth as well. So the markets are looking out for any sort of improving US data sort of to give them signals of possible fourth rate hike this year. And obviously what we've had in the recent days is an upgrade to GDP, stronger consumer confidence, and now we're looking forward to the ISM manufacturing data this week, non-manufacturing on Wednesday, and also the non-farm payrolls on Friday. So a big week of US data ahead. Now what we have also got is the UK has triggered Article 50 for the Brexit continuation, and now there's sort of this toing and froing you've got between the UK and the European Union as to exactly how each party is going to sort of align itself in terms of the negotiations, in terms of where they're going to sit for certain bargaining tools, etc., etc. So it's going to be very interesting to see how that's going to pan out in the coming months, and I think you're going to see UK assets sort of pulling higher and lower, a lot of volatility as the months go on with that. So I think that is going to impact certainly on sterling, and I think that we are already seeing that coming in the days since the Article 50 was triggered. Now also you're going to get with that the impact on FTSE 100 as well, because sterling versus FTSE 100 seems to still be that negative correlation play there. Now what we've got this week, as I said, is a lot of US data and a lot of key data that are going to drive markets. So I think that is the main focus really, what traders are going to be looking at. And moving into the FX markets, I think that euro dollar is still impacted by not only the strong dollar but also an increasing sort of weakness of the euro that we've had in the last few days. Now the suggestion is that the ECB will not be sort of tightening monetary policy prematurely, and that has impacted on the euro. And also the inflation data that we had at the back end of last week, which really did hit the euro, and I think will continue to be a drag on that, because certainly in terms of inflation expectations, it's not excessively strong going forward. It's still around about 1.5, 1.6% on the five-year forward for the eurozone, so it's still not all that great or moving all that strongly towards target. Now in terms of euro dollar trading, it's pulled back below the 107.10 mark, which now sort of impacts, I think, on the this base pattern that we've got. It's sort of more of a range play than a base pattern for now. I think trading below that 107.10 mark maintains that outlook, sort of between the 105 to 109 area on that euro dollar, and obviously 107.10 is sort of basically in the middle of that, so sort of trading marginal bear bias within that move. Now cable again in a range play, but sort of started to pull higher, although today it's come under a bit of pressure on the back of Brexit chatter over the weekend, and also the fact that the UK manufacturing PMI again another disappointing number there, and it's just pulled cable lower. But will it continue to trade in a range? I think it probably will do, and I think that will continue for a while really. Now in terms of dollar yen, again a key move on a trade around that 111.60 mark. That was the old key floor which became resistance. That has now become again resistance this morning. Will that continue to remain a pivot? I think it is a near-term barometer, that 111.60 mark, I think that we need to look out for. Aussie dollar, an interesting one in front of the RBA. We've seen the Aussie trading in a sideways range for the last few months, really 75 to 77.50. What will the RBA do this week? Now in terms of the indices, well, we're looking out for Wall Street, which has recovered, yes, but I think the S&P 500 still needs a little bit more. It had a bit of a disappointing move on Friday. Maybe that was a bit of squaring at the end of that quarter, but it still needs to run higher. The DAX is the big outperformer, still pushing ever higher towards those all-time highs. FTSE 100 is sort of like the poor runner at the moment, and it is struggling to really gain the traction and threatening possible top pattern as well. So S&P 500 needs to break above 2390 to really sort of dispel the possibility of another lower high. DAX, as I said, all-time high coming back into play around that 12390 level, and the FTSE 100. Is it going to form a top pattern? I think if sterling continues to push higher, it could form that top pattern. But for now, I think we're calling it a range trade, but still need to watch out for the key support 7255 there on FTSE 100. In terms of your commodity prices, the gold price continues to trade around with the strength of the dollar. Gold has again just started to range a little bit recently. 1220 to 1260 seems to be a bit of a range, but holding up above that 1240 support, break down below 1240 would pull back towards 1220. And again, I think 1220 is a key pivot in the medium to in the medium term basis on gold. For the oil price, a lot of conflicting sort of impacts on the oil price at the moment. You've got US oil supplies which continue to move high. You've got the oil rig count which continues to sort of increase, and also the EIA oil inventories are a big drag on the oil price there. However, you do have the fact that the OPEC agreement is sort of their talking about possibly extending that into the second half of the year. So you've seen this recovery in the oil price back above $50 on WTI, and also just holding on to that $50 level and pushing higher on Brent crude. So I think there is still some sort of interesting trading going on in the oil price, a bit choppy, and uncertainty really in terms of the longer term outlook still on the oil price. So with that in mind, as I said, we've got all this data coming out throughout this week. We've got the PMIs on Monday. We've just got the ISM manufacturing data on Monday. Now, the manufacturing PMI ISM data has been very strong last month, and again, it's expected to be a strong 57 this month. In terms of the services, again, on the non-manufacturing ISM data, very strong 57 is expected. Pretty much on Wednesday as well, and in front of Friday's non-farm payrolls report. Payrolls again going to be an important number. Don't necessarily focus on the headline data. Look towards the average hourly earnings being the key data. We're looking for average hourly earnings picking up 2.8% is the expectation there, in line with last month. So continued average hourly earnings growth will be strong for the dollar, strong for the prospects of a rate hike. So watch out for that on Friday. So lots of key US data points to really focus on this week, and the dollar treasury yields in focus. The chart that I've got on the bottom here is the 2-year treasury yield, which I think if it can pull back above 1.3%, that would be your trigger to, I think, suggest that the market is beginning to focus more on maybe even 4 rate hikes this year. So possibility of looking out for a breakout above 1.3 on strong data. So I wish you good luck in your trading today and throughout this week, and I'll speak to you again next time. Thank you.